So, James, a lot to digest here. International growth flat across 3 quarters in a row now. $2 billion in stock-based compensation. You've been very positive on Snap. What went wrong here?
Yeah, we've been positive. We have been giving them the benefit of the doubt. I will say, look, the user number, I think, was okay. The issue there is not so much. I think the bigger concern is on the monetization side. ARPU did fall 15% sequentially to 90 cents. That is where the street was, but you did want to see outperformance as far as that metric is concerned. And you put that together, you get to a revenue number of 150 million, 7 million below consensus. And I think coming out of the gate, the issue coming into this quarter was the fact that you had a very difficult setup where expectations were sky high and the bias was incredibly toward the downside. So it really was a difficult performance for the company to meet.
Well, we've been listening in on the earnings call. Evan Spiegel, the CEO, has been speaking. He had this today to say. Take a listen about ad revenue.
We made significant progress in automating our advertising business this quarter, with more than 20% of Snap ad impressions delivered programmatically through our API. Automating our ads platform means that advertisers get better pricing, our community sees better ads, and we are able to make more money per impression.
Now, James, as we know, Facebook has basically lifted Snapchat stories and spread it across all the platforms, from Facebook to Instagram to WhatsApp to Messenger. Snapchat stories are critical. This is where they display their ads. How concerned are you about the competition?
Not so much yet. I mean, look, the users are growing at a healthy rate. And engagement is growing. You know, we also learned on this call that engagement time spent has gone north of 30 minutes per day. You know, that's a very sizable number. You know, peg that against Facebook properties, 50 minutes across their portfolio of apps in aggregate. So, you know, their engagement is there. And I think the use cases are different, you know, when it comes to Snap, as far as the messaging, the more rawness of the experience, as well as on the content side through their Discover platform. So I'm not looking at it as completely apples to apples, you know, with Instagram. And I think if you can see a situation where ARPU, which is the monetization per user, increases dramatically, because when you benchmark it against Facebook, it's only 10% of where Facebook is, and it's 20% of where Twitter is. You're not telling me that it can't get to where Twitter is today, you know, so that's kind of the bull case for the stock.
James, it's Caroline Hyde in Boston. Great to have you with us. I remember the day that you came out with a buy recommendation. You were one of the first to do so. $25 a share, still seeming reasonable to you, despite the fact that we're plumbing, well, back to the depths of when the IPO priced at $17.
I'm inclined to say it is right now, you know, just based on looking at the initial numbers and hearing what I am on the call as it relates to the user growth and it relates to the time spent. Monetization is a question that we need to drill a little bit further on. You know, it's unfortunate that we're not getting any more clarity quantitatively on the financial outlook as we look into 2Q, and for the year they're kind of pinning that on our growth is going to be stemming from the timing of our product rollouts. So a lot of questions. There's a lot more explaining to do that, you know, we would like to see, but at least, you know, the users and the engagement are going in the right direction.
So still giving them benefit of the doubt, as you said at the start of the call. I just want to ask more broadly a question about IPOs and how this reflects on it, because Axios, we've already heard from Dan Primark saying this could cause a bit of a cloud around IPOs, internet-based IPOs going forward. Does this make perhaps the IPO pipeline a little bit more worrying when we see this sort of first quarter revenue numbers coming out?
Yeah, I mean, slightly. I mean, look, the IPO itself was a success. I think you can argue that. I think the issue was, I mean, it's interesting because the expectations just got so high with the sentiment so negative. You know, the most bearish people on the stock had the highest estimates. And when you talk to the buy-side community, that was the case as well. So, I mean, it was a very difficult company, a very difficult setup to perform against because, you know, they had to do well beyond the rosiest of expectations in order to put the naysayers to rest. So I think it was kind of a lose-lose situation where I think that's a learning lesson that other potential IPOs can take. But the IPO itself, I think you can argue, was okay.